This question was taken from a past matric paper. Alright, if you look at what is required here, the first thing they ask you is how the preparation of a debtor's collection schedule and debtor's age analysis will assist Matthew in controlling debtors. Now, debtor's collection schedule is what you actually cover in cash budgets, which you haven't done yet this year. When you're doing a debtor's collection schedule, you're planning ahead, whereas debtor's age analysis shows what has happened with debtors that have actually taken place already. So if you look at what answers you could have given here, you could have said you're projecting your anticipated receipts from debtors. So you are actually saying, well, this is how much we're going to receive after 30 days, 60 days, 90 days, and so on. You can also ensure that debtors keep to the terms of their accounts. If you plan in advance and you see that debtors are not going to keep to the terms, then you can take corrective action immediately. And that's the same thing as over here. So you can act immediately if the debtors don't comply with credit terms. And then after you've actually done your budget, when things actually take place, you can compare what you budgeted with what actually took place. And by doing that, you can see whether your budget's realistic, whether it needs to be adjusted, or what action you need to take to correct any issues that you might have found. As I said, the debtor's age analysis is looking at transactions that have actually taken place. So it's a very effective method of credit control because it's showing you each debtor's account, and at a glance you can see the standing of that account. You can then take action against debtors who don't comply, by charging interest. If necessary, take legal action. Legal action, though, is only realistic if the debtor owes you a large amount of money. Otherwise, it's not worth it. Hopefully, by keeping in touch with your debtors and reminding them and so on, you can minimize bad debts. Alright, the next question, they tell you that the business has the pay slip of all the debtors. What other information should they obtain before allowing customers to open accounts? 2 points within reason each case. Now you can tell this is taken from a past paper because of all the options that they include here. You need to remember that when papers are being marked, when NSC exams are being marked, they need to cover all possible options. So there's way more information here than you need to actually be able to answer. Just choose a couple and remember those for your exam. So for example, a telephone number so you can communicate promptly, proof of residence or their address to make sure you can trace the debtors that don't stick to the credit terms, to avoid fictitious debtors. That's where people make up an address and say it's their address, and then when you investigate you see that there's no such person at that address. And to make sure, if you're still using post, to send these statements to the correct address. Contact details of family or a friend or whatever, that's to track the debtors if other information is incorrect. We look at a debtor's bank statement balance to see how he's managing the finance. Is he going to be able to pay you back or not? ID document to make sure that the correct personal details of the customer are on record, so you have the proper information for each debtor. Credit references or history, that you check in the credit worthiness of the debtor. In other words, you're checking how likely is the debtor to pay you back. What did he do with other businesses that sold on credit to him? And then more recently, obviously, email addresses. That's how you usually contact your debtors so that your communication can be prompt and sent to the right address. Alright, then the next question says, calculate the percentage of debtors complying with the credit terms. Complying means sticking to. So if you look over here, the credit period is 60 days. So of your total debtors here, the current month's debtors plus the 36 to 60 days rather, debtors are also complying with their credit terms. So those two amounts in total are, these aren't. So there are two ways of doing this. You can take these two numbers here and add them up. So it's the current and the 30 days to 60 days. Add them up, divided by the total of the debtors, gives you 20%. Or you can take the people that are not complying, which is a total of the greater than 60 days, divided by the total. That gives you 80% that are not complying, which means 20% are. And then a nice easy question here, 2 measures to improve collection from debtors. Okay, you can send out monthly statements or email them, give discount for prompt payment, add interest to overdue accounts, don't sell on credit to debtors exceeding the credit limit or if they're not up to date. You can send SMS reminders to debtors. You can actually employ the service of an attorney or debt collector or sue the debtor. Once again though, that is only if the debtor owes you a large sum of money. If you employ a lawyer for somebody that owes you a small amount, you're going to pay more to the lawyer than what the debtor owes you. Obviously, therefore, it's not worthwhile. And then you could encourage debtors to pay by debit order. In other words, you know that on a certain date, you are going to be able to collect a certain amount from the debtor. So in that way, you're pretty much guaranteed to get payment from the debtor. Alright, so that's just an example of an age analysis where they actually give you total debtors and not individual debtors. If you want more information on individual debtors, look at the notes. Otherwise, if it's just totals, then this video is adequate. Thanks.